What's going on, guys? Welcome back to the channel. Welcome back to another one. President Biden, Kevin McCarthy debt talk ends with optimism, but without a deal. We're going to talk about the details on that one. Now, if the United States breaches the debt ceiling, these states are being warned that they will feel it the most. I'm going to explain which states are going to be most impacted by this. A growing number of women are actually suing Texas over the state's abortion laws. And the White House has warned that stocks in the stock market will plunge 45% and a deep recession will strike in the third quarter if the U.S. defaults. And Bud Light is buying back unsold beer as company scrambles after backlash. Did you guys hear about what Bank of America is saying? So Bank of America is basically taking a glass half full case for the stock market. They're actually disagreeing with what the White House is saying. They're saying that the S&P 500 could very well be at 4,300 by the end of the year, 2023. Welcome back to the channel, guys. It is Ron Yates here. Hope you guys are doing very well. If you're new to the channel, please consider subscribing to the channel. And while you guys are at it, go ahead and smash that like button. I would totally appreciate that. So let's talk about the Biden-McCarthy debt talks. Well, ultimately, they feel good, but no real progress has been made, right? So President Joe Biden, House Speaker Kevin McCarthy, they remain without a deal in the debt limit just earlier today, Monday night, after another round of talks. Though their discussions were productive and vowed to keep negotiating to avert a catastrophic U.S. default, no progress has really been made materially. Now, the two men met at the White House for more than an hour this evening. In Washington, Treasury Secretary Janet Yellen has warned it is highly likely that her department would run out of sufficient cash in early June, and that default could come as early as June 1st. That means we have less than 7 days now. Now, the tone tonight was better than any other time that they've had discussions. This comes according to Kevin McCarthy. This is what he's letting us know. He said that they had a very productive discussion. We don't have an agreement yet. So, I mean, either the Democrats or the Republicans, one of these sides are going to have to compromise. And really, we should see something bipartisan. We should see some little bit of give from each side so we can come to an agreement. If the U.S. defaults, this literally could be catastrophic. And this will have a global, not just a United States impact. I got a lot of subscribers, viewers from the UK, from Australia, from Canada. You guys always comment and let me know that you guys are tuning in from wherever you're watching. And you guys realize that this is going to have a global impact. So White House negotiators returned to the Capitol, and they met for more than an hour, and then they left after 11 p.m. So that's all we got so far today on the debt talk. But there's a lot more to share. In fact, the White House is warning that the stock market could very well plunge 45% in a deep recession that could strike in the third quarter if the U.S. defaults. That's a pretty significant warning. I mean, just think about it. 45% crash, economic collapse in the stock market if the U.S. defaults. Now, what have we seen from the Fed? What have we seen from Fed Chair Jerome Powell? What have we seen and heard from Janet Yellen? Their estimates are generally overly optimistic. So if the White House is saying that if the debt is defaulted, if U.S. debt is defaulted, that the stock market could crash 45%, I think that this is going to be way worse than what they're claiming. If they think it's going to crash 45%, I wouldn't be surprised if it crashed 80%. This is the government that we're talking about. This is the Fed. This is the reserves that we've been, hey, inflation's transitory. That statement was made like 3 years ago. We're still dealing with inflation today. So I'm just saying. And so basically the U.S. debt default could spark a 45% crash in the stock market, generate deep recessions similar to the 2008 Great Financial Crisis. I'm talking if the stock market crashes 45%, if you've seen some of the layoffs that I've been reporting in the past couple of weeks, you ain't seen nothing yet. We would see 2008 style recession. We might actually see a depression. Who freaking knows if that were to occur? ETFs, index funds, mutual funds, Vanguard, E-Trade, Robinhood, M1 Finance, they would all be impacted and they would all be going down. That's my prediction. And I surely hope that I'm totally wrong. I hope I'm 100% off base. I mean, just think about all the people that would be impacted, all the retirees, all of the people who are approaching retirement. I mean, heck, just families in general. If your net worth declines by 50%, that's not going to be a good day for you. I mean, just imagine whatever you have in your savings account. Think about that number right now. Now, just imagine your savings account, which is overnight chopped in half. Not a good feeling, right? So the deadline for lawmakers to shift the debt limit is rapidly approaching as in early June, as Treasury Secretary Janet Yellen exhausts all of the department's extraordinary measures. If a debt ceiling deal is not reached, it could mean that the Treasury foregoes, get this, guys, Social Security payments, payments to Medicare, and payments to Medicaid, and ultimately payments to U.S. bondholders. Now, granted, if people who are receiving Social Security, SSI, SSDI don't get their payments, that's a big problem. Bills are not going to be able to get paid. People living paycheck to paycheck. Rent may not be able to be paid. If you have a mortgage, that might not be able to be paid. Car payments, credit card debt. But even worse, if the U.S. bondholders don't get paid, we're talking China. We're talking international investors. We're talking Japan. We're talking the Philippines. Anyone who's ever bought U.S. debt, bonds, U.S. bonds, the UK, Britain, England. If these bondholders don't get paid on time, I'm telling you guys, we haven't seen anything yet. A potential debt default mid-June has led to a surge in a U.S. 1-month Treasury yield to 5.56% from its low of 3.31% last month. Generally speaking, when that yield increases, that means that the risk is a little bit higher. Not a good sign. All right. And that yield has increased nearly 50%. The closer the U.S. gets to the debt ceiling, the more we expect that these market stress indicators will worsen, leading to increased volatility in equities and corporate bond markets, and inhibiting firms' ability to finance themselves and engage in the productive investment that is essential for extending the current economic expansion. Cliff notes on that. Bottom line is they won't be able to continue hiring. More likely, there will be more layoffs. More people will just get fired. They'll probably have to close up shop and more businesses will close. Not a good sign for the economy. Not a good sign for anyone who's working for these companies who depends on a paycheck in order to pay their bills and feed their family. Now, other stock market measures show how little chances of the U.S. Debt default. But other market measures show how little chances of a U.S. default happening is. With the stock market's VIX fear index or fear gauge trading at low levels and the broader stock market trading at 1-year highs, basically the stock market is calling Washington, D.C.'s bluff, and their stock market investors are like, hey, we don't think y'all going to default. We feel like you guys are going to wait till the last minute like you always do, and then all of a sudden come to some miraculous agreement and sign off on things, and everybody's bills will be paid, and all of this will be a moot point. That's what I'm taking from the fact that the stock market's VIX index is trading at low levels. Because literally, if the stock market was freaking out about this stuff, you would see like 1,000-point swings in the Dow Jones like every single day leading up to the June 1st date. And we haven't really seen that. Meanwhile, credit default swaps currently imply that a 4% chance of U.S. default is there, according to JP Morgan. So we're going to see what happens. Only a few more days left, folks. Now, while a growing number of women are now suing Texas over the state's abortion laws. Yeah, okay. So 8 more women have joined a lawsuit filed by 5 women against the state of Texas, where they say abortion laws prevented them from terminating their pregnancies despite life-threatening health concerns. Now, one of the women signing onto the lawsuit is an OBGYN who was forced to travel to Colorado to abort a pregnancy that had resulted in the diagnosis of a fatal fetal anomaly. Another woman learned that in the 22nd week of her pregnancy that her baby boy had anencephaly, I can't even pronounce this medical term, and basically wouldn't survive, but was told she either had to wait for the baby's heart to stop beating in her or carry the pregnancy to term. I'd love to hear from you guys. What are your thoughts on abortion? Like, should the state tell a woman what she can and cannot do with her body? They call it choice versus, pro-life versus pro-choice. Personally, I think that's a very divisive terminology to use. I think that it should be choice versus no choice, if anything. But let me know what you guys think on that. What do you think about these abortion laws in different states and these different pills available? Should men get more? Should men take a more of a proactive approach to, get snipped maybe, but then again, it's like, okay, that's kind of a permanent process. So it's like, unless you're done having children, do you really want to go that route? There's a lot of things to consider on that one, but hit me up in the comments, guys. What do you guys think on that? Now, Bud Light, they're buying back unsold beer as company scrambles after backlash. Anybody here drinking Bud Light? Me personally, I don't drink beer. Beer always reminded me of like urine. It looks like urine. Every time I smell the breath of people who drink beer, it's just always so unattractive. And the taste, I've tasted like several different beers, and every one of them make me want to gag. That's just my personal take. Anyway, Bud Light is reportedly buying back unsold beer that has passed its expiry date, according to the Wall Street Journal. A move which could signal a change in the strategy for the iconic brand following the culture war storm it recently found itself in. So after offering a sponsorship deal to trans activist and influencer Dylan Mulvaney in early April, sending the social media star a commemorative can celebrating the anniversary of her gender transition, Bud Light has faced a major boycott from conservatives who have accused the brand of going woke and alienating its customers. What do y'all think about that? Would you stop drinking a particular product because they endorse someone you don't support? Me personally, I'm up in the air on that one. I guess it would depend on who they're endorsing and how deeply I am against whatever that person is about, or maybe how deeply I don't like the person that they're endorsing. That's a big one. Let me know what y'all think on that one. Like, how many of you guys continue to drink Bud Light in spite of this, and who in the audience has decided, hey, I'm not drinking Bud Light ever again because of this endorsement here? Give me your thoughts on that one, guys. And heck, let me know if you're like me. Do you even drink beer? Maybe you don't drink beer. Let me know if I'm not alone out here. Anyway, so if the U.S. breaches the debt ceiling, these states will feel it the most. Let's talk about these states here, folks. So with negotiations on raising the debt ceiling still going on, the U.S. may be less than 2 weeks from defaulting on its debt. An unprecedented scenario. I mean, we haven't done this before. An unprecedented scenario that government officials have variously described as unthinkable and potentially catastrophic. I think that those are understatements, in my opinion. A default would mean that the United States government fails to pay some or all of its obligations because Congress failed to raise the debt ceiling to authorize the borrowing of more money to fund spending it has already passed. That would make the United States like a deadbeat borrower. Its impact would be felt by anyone expecting funds from the government. Could be Social Security check, could be SSI check, SSDI checks, SNAP payments, EBT allotments, EBT payments, a government bond payout, or in the case for federal employees, a paycheck. Now, it's funny. They're saying in the case of federal employees, a paycheck, right? Does Congress consider themselves a federal employee? Because there is a bill that they're looking at trying to push through here where basically members of Congress wouldn't get a paycheck if there was a government default. Well, if you have to pass a bill to prevent Congress members from getting a paycheck, it sounds to me that everybody other than Congress would be considered a federal employee, and members of Congress would continue to be paid regardless of whether or not we pass this thing or not. Seems a little unfair, especially since most of these members of Congress, if not every single one of the members and every single member in the Senate and the House of Representatives is pretty much, for all intents and purposes, a multimillionaire. So if they didn't get a check from their $200,000 per year salary, chances are they're just fine. Because think about it. If you're a multimillionaire, chances are your net worth is somewhere north of $10 million, right? So think about it. If you make $200,000 a year, which is about what the average salary is for, the average member of Congress, Senate, or the House of Representatives, $200,000 a year is about $16,000 a month. And I'm just going to assume that most government employees get paid every 2 weeks. So that would mean that they're getting paid about $8,000 per week before tax. So if you have $10 million in the bank, do you really feel an $8,000 per paycheck? If your paycheck didn't show up and your paycheck's $8,000 every 2 weeks, but you got $10 million in the bank, is it really that much of a hardship for you? That's really what I'm trying to say. Yeah, and that's the sad state of affairs. The people in office who represent me and you, they don't understand your grind. They're not feeling what you're feeling. I'm, here we come up to 2024's elections in a couple of weeks, right? Let's see. So this is May. I mean, not in a couple of weeks, but they're going to start running these commercials if they haven't started running them already. I don't watch that much TV, so forgive me. But you're going to start seeing these really poorly scripted and poorly acted commercials promoting these different politicians, and they're all going to be pointing the finger at one another, talking about how this guy's such a liar. Look what he did. This girl over here, this woman over here, she's such a liar. They're going to dig up the dirt on all of these competitors, all of their opponents, and at the end of the day, those who are running ads for themselves are going to promote and make promises on all these different things. That if you elect me, I'll change the world. I'll make everything better. And all the weeds in your lawn will go away because of me if you put me in office. They give this crap every year. Once they get into office, it's the same old bull. Anyway, so Washington, D.C., where 1 in 4 jobs are tied to the federal government, would be hardest hit, becoming the poster child for a financial disaster. States with large federal facilities such as national laboratories or military bases would be next in line. That includes Hawaii, which is home to the United States Pacific Command and to 11 military bases. Alaska, with vast federal land holdings, and New Mexico, home of Los Alamos National Laboratory. So while the public sector typically serves as a stabilizing force in case of a breach, it supercharges its economic fallout. Yeah. So, well, folks, those are the states that would be most impacted if there was a default by the U.S. federal government. Yeah. Now, Bank of America, they're taking a different approach. They're taking a different stance on what they think is going to happen with the stock market. So Bank of America, they're taking a glass half full for stocks, and they're actually seeing the S&P 500 at 4,300 by the end of the year. Let's just see where's the S&P 500 right now. Let me just go to CNBC.com. So just to see how much of a leap that would be. Okay, so S&P 500 is at 4,200 right now. So another 100 points on the S&P 500. That's not that far out. So I could see the stock market doing that. That's not that far out. That's like what 1% would be 40. 1% would be 40, 80. So like 2.5%. The stock market would only have to move up 2.5%. I'm not all that impressed with that kind of movement, but that would actually be very good. 401ks would be worth more. Investment retirement accounts would be worth more. Pretty much all of your ETFs, index funds, your Vanguard ETFs, your ticker symbol VOO, your Charles Schwab ETFs that track the S&P 500. All of those would be up if Bank of America is correct. Now, the strategists of Bank of America, they're making a bull case for stocks, basically by targeting a year-end level for the S&P 500 that, guess what, has not been seen since last August. Now, if you guys have been watching the channel for a while, I've been telling you guys, they're talking about, how bad the economy is, but, as quiet as it's kept, the stock market has been quietly rallying, okay? And what I mean by that is for the last couple of months, and I swear I talk about this all the time, we have been within 5% of the stock market's all-time high. And it's wild because of all of this negativity that's going on. The stock market's still climbing and going north, right? Now, people have messaged me, Ron, I've lost so much money in my 401k. I've lost so much money in my IRA. I've lost so much money in my ETFs, index funds, yada, yada, yada. Guys, you don't lose money unless you sell for less than what you bought it for. So, as long as you don't find yourself in a situation where you must sell, if you just decided, hey, I'm scared, stock market's going down and I sell out. Well, if you do that, that is a guaranteed way to lose your money. And if you don't have the ability to kind of like just turn off the noise sometimes, and that's sometimes what you got to do. A lot of people who are trying to invest in the stock market for the first time, they're trying to build passive income. They're leveraging the stock market, the power of compounding interest. The power of compounding your money and compound interest, compounding your dividend income payments from stocks. A lot of people feel like you only have two options. You can buy stocks, you can buy index funds, you can buy ETFs, or you can sell them, right? You only got two options. That's what most people think. But honestly, there's several more options. But a third very important option is to do nothing. Like sometimes you just need to just don't do anything, because a lot of times people make very emotional financial decisions and they end up burning themselves. It's one of the many cognitive biases that humans suffer from. Like usually when they're under stress, they will make very poor financial decisions. Been there, done that, got the t-shirt. That's why I don't make financial decisions while I'm in a very emotional state. It'll cost you a lot of money. So they lifted Bank of America. They lifted their year-end target on the S&P 500 to 4,300 from 4,000 previously. So as the economy got worse, the Bank of America became more confident, basically saying that the end of the era of easy money might be a good thing. Basically, they're saying, gone with the stimulus checks, gone are the days of extended unemployment benefits and, extra SNAP and EBT emergency allotment benefits going out to many families that needed it. They're saying maybe all this is a good thing. And that's because the United States is moving away from decades of financially engineered growth, and American corporations are shifting their focus to structural benefits such as efficiency, automation, and artificial intelligence. We already talked about how many jobs may be going away thanks to artificial intelligence. But if we stay optimistic, if we stay smart, and we keep training ourselves and learning new high value skills, then maybe AI could possibly make you more money. Let me know if you guys would like to learn more about how you could leverage AI to increase your own household income. I could create a video for you guys on that if you guys are interested. Hit me up in the comment section down below. Now, one of the natural outcomes of the current environment is more stable earnings. This comes from Bank of America. Now, Bank of America's view comes at a time when the benchmark U.S. stock market has repeatedly failed to hold above 4,200, given lingering worries about the U.S. debt ceiling and the prospects of a recession. The bullish stance held by Bank of America is far from universal. Basically, they're saying here, Morgan Stanley, their equity strategist Michael Wilson, says his firm sees a much more dire outcome than the consensus. And other analysts regard the 3-month Treasury bill as reasonable alternative to equities. So Bank of America is basically probably not the majority in their perspective on how good the stock market's going to perform in the next, let's just say, between now and the end of 2023 going into 2024. In a note, equity and quant strategists and others at Bank of America said that they relied on 5 indicators, which included their most bearish input and their most bullish model, that put the S&P 500 somewhere between 3,900 and 4,600 points by the end of December. So we're in May now. May is almost over. So let's just say, June through. So basically, you got 7 months between now and the end of the year, according to Bank of America's estimate, that we could very well be in a very, very good place from a stock market investment standpoint. So drop me some comments, guys. What are you guys thinking about this? What do you guys think the stock market is going to do by the end of the year? And where are you putting your money? You leaving your money in the bank, in a high interest savings account? Are you leaving it in a checking account? Maybe a CD, certificate of deposit? Are you invested in the stock market? Are you just stuffing your money under the mattress? Or are you buying gold or silver? By the way, for the best way to invest in gold or silver, check out the links in the description down below. But right now, guys, you should see a video up here or up here. Definitely click that video right now and check out those videos. Guys, I just want to thank you guys so much for hanging out with me today. If you're new to the channel, consider subscribing. Also, drop a like for this video. I totally appreciate it. And drop me some comments down below. Ask me some questions. I want to help out as much as I can to the community. Appreciate you guys. Please be safe. Please stay positive.